Hello value investors, thank you for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about MercadoLibre and why MercadoLibre is an interesting player. It's an online e-commerce player in Latin America, and what's attractive about this investment. We're going to talk about its strong revenue growth rates, and we're going to discuss about its profitability profile, and then we're going to get stuck in and talk about its valuation. So here's the thing, right? So far, it's been growing at an incredibly fast rate. You can see here for the latest quarter, it was up 94% year over year. That being said, you have to keep in mind that last period of Q2 last year, it was growing at 61%. So it had a slightly easier comp than it's going to have going ahead. So going ahead, it's going to have to come against that comp of plus 90% year over year growth rate. So it's going to be tough. And that's something that I as an investor will be thinking about straight away. So on the other side of the equation, you have to think about the fact that they are having very strong user growth that was up 47% year over year. So they're having stronger user growth, and they're having more product assortment, more engagement to the users. So that's good. All that being said, the number of active users was only up 3% since December period. So December was at around 74 million, and for the latest quarter in Q2 was 76 million. So they're not. I believe that they're kind of reaching a saturation point in terms of user growth. I don't think that's a huge problem because, as I've discussed, they're already having the financial wallet, the digital wallet is resonating with the users. They got in within the digital wallet. There's a lot of services. Credit, debit cards, so there's a lot of potential to engage, and also you also have the e-commerce side of business as well. So altogether we have a very strong business that is growing at a very rapid rate. On the other side of the equation, you have to think about it. So the EBITDA margin was slightly compressed to 10%, and that implied that its net income was actually down. So net income in the previous year was 6.4%, the margin, and this time around was only 4%. So you'd say, okay, yeah, that's compressed slightly, but remember that this 4% net income margin is the second strongest quarter it's been for a long period. So it is you kind of have to say, okay, they're investing for growth, but at some point in time, you got to kind of start showing investors, like Amazon used to do every 5 years when they had the check-in period. You have to show investors that you can really drive that profitability. But as I said many times already, this is really going to be a growth story, and you're the type of shareholder that gets involved in this type of investment is really looking for that strong, consistent revenue growth rate. They're not going to be overly concerned too much about the path to profitability right now, but at some point, you do have to kind of check in. The other thing that I want to talk about, so the stock is priced at approximately 10 times next year's revenues. It's punchy, okay? I'm not going to say that it's not punchy, but you have to counter that. It's very difficult to price a business that's growing at close to 90% year over year. It can have that type of sustainable growth for some time. Paying 10 times next year's sales is very much justified. On the other side of the equation, if it was to kind of slow down as economies reopen in Argentina, Mexico, and Brazil, you could say, okay, that could fizzle out, and then you're kind of left in this kind of conundrum. The other side that I want to talk about, so if you look at, for example, JD.com is only growing at approximately 25% compounded annual growth rate, but that company is priced at less than 1 times next year's revenues. So if you look at JD.com, it's a business that's very free cash flow generative. So it's priced at approximately 30 times forward free cash flow. So yes, okay, it's not growing as fast, but it's very free cash flow generative. Another e-commerce player you can compare against is Coupang. So Coupang is the South Korean Amazon, let's say it, or in this case MercadoLibre, and that's kind of growing at mid-50s growth rate, but it's only priced at 2 times next year's sales. So in that comparison, you have to say, okay, yeah, MercadoLibre is substantially more expensive. That being said, you do have to remember that in the case of MercadoLibre, it's really a growth story here. So in any case, hope you found this video useful, and